Hi everyone, welcome to part 2 of why small businesses fail. In my last video, I covered one of the reasons why small businesses fail is because the business owners will treat their business like a job instead of treating it like a business. What I mean by this is that small business owners will take the income that's coming from their business and then will use that to pay their personal expenses like their mortgage, their rent, their car loan, etc. And commingle their business and their personal expenses within the same account. One of my suggestions in my last video was for business owners to pay themselves a salary, and I had some people on my Instagram ask me to make a video where I cover how does a business owner go about doing this. The first thing that you need to do is go through all of your personal expenses and calculate how much money you will need to cover all of your personal expenses, okay? Once you have that number, even if that number is above what your small business makes right now, that's okay, because you are going to work up towards that number because you're going to work on growing your business. So let's say that number is $2,000. I know that's very unrealistic in today's day and age, but for simplicity's sake, let's use $2,000. So now that you've determined how much salary you want to pay yourself, now you need to look at your business to see how much can you afford to pay yourself a salary from your business, okay? So I'm going to post up a screenshot that I took of a P&L. I created an income statement where it covers your revenues and your expenses and your net income. And that'll show you what that looks like. And we'll also use that as an example. You can pause to take a screenshot and look at it in more detail. So the screenshot has your revenues, which is the money that you're generating from your sales. This is everything that you've generated throughout the period. So whether you're doing this on a monthly, quarterly, or annual basis, I did this on an annual basis, assuming that your business is generating $100,000 a year. So the first line is your revenue. Then you have your cost of goods sold, which is the expenses, your variable expenses that go into either creating the product that you're selling, or if you're a reseller, it's the cost, what it costs you to purchase that product at wholesale in order to resell. Or if you're a service provider, then it's the expenses that go into providing your service. So if you're a cleaning service company, this is your supplies that you use for your cleaning business. If you do logos, and this is the software that you use to provide that service. So you have your revenue and your cost of goods sold, which if you do revenues by the cost of goods sold, you have your gross profit. And then from your gross profit, you will deduct your operating expenses, which is the expenses that you need to incur to run your business. So this is your rent, this is your salaries if you have employees, this is your utilities, your telephone, your internet, this is your marketing expenses, your accounting and professional fees, etc. Once you've deducted all of those expenses, now you arrive at operating income, which gives you a pretty good idea of what your business is profiting. However, it doesn't take into account your income taxes. Which, by the way, guys, income taxes is very important. If you own a small business and you're generating over a certain threshold and you're not making estimated income taxes throughout the year, it is more expensive for you at the end of the year. You're probably paying penalties because you didn't estimate your income, you didn't pay an estimated income tax throughout the year. It's usually done on a quarterly basis. So you might want to check in and see if this is a penalty that you're incurring at the end of the year, because you can save a lot of money by paying upfront your income taxes. But anyway, so once you deduct your income taxes from your operating income, you'll arrive at net income. And this is what your business has left over at the end of the year, or at the end of the month, or at the end of the quarter, in order for you to reinvest back into your business. But this is what you'll do. So in the example that I gave, the net income was about 32%. So what you'll do is take about 30% and you're going to leave that with your business. That's going to be like your business savings, and you're going to use that as cash flow for your business and also to reinvest back into your business. Because that's what we're in business for, to grow. In order for you to grow, you need to reinvest back into your business. So the other 70%, this is what you're going to pay yourself in salary. Now you can use a smaller number than 70% if you'd like. I would recommend using a smaller number. That way you have more money to reinvest into your business. But that's up to you and how you want to manage your cash. So for this business, I did 70%. So that came out to about $23,000 a year. So that's what you'll pay yourself on an annual basis. And you can break that down monthly or bi-weekly, however it is, how often you want to do payroll. So now that you know the amount that you're going to pay yourself, you're going to get with a payroll provider if you don't already have one, and you're going to start paying yourself this salary. Now, I suggest you do this exercise on a monthly, quarterly, and annual basis, because you want to make sure that you're generating consistently this amount of money so that you are able to pay yourself the salary consistently. You don't want to run into any scenarios where you're 3, 4, 5, 6 months out of the year, you cannot afford to pay yourself a salary. This is why it's so important to keep track of your finances and make sure that your profitability is stable and consistent. Now that you know how to determine how to pay yourself a salary, you should be good to go, and you should be able to get with a payroll provider like Hyphen, which is the name of my company, and start setting yourself for success. And also, never forget to reinvest back into your business. Just as you need to cover your personal bills, you also need to reinvest back into your business. You're in business for growth. You're in business for the long term, not for the short term. We want this to be our way of living, not just a side hustle. So let's do it. And let me know if there's anything else that you want me to elaborate on, or if there's something that I can clarify. Leave comments below, and I'll see you next time.